The first 30 minutes of every trading session hold a secret, and if you know how to read that window, you can make some serious profits. This is the opening range breakout strategy, and in this video, we're going to show you exactly how it works, share a free indicator that helps identify these setups, and walk you through some examples. Let's get right into it. The opening range breakout or ORB strategy is built around one idea. The market reveals its intentions in the first few minutes of the session. That's why professional traders pay so much attention to the first few minutes of every session. It's where volatility is at its highest. It's when retail traders, institutions, and smart money traders are all jumping in. And it's also where the first emotional trades of the day start to leave a footprint. You wait for the session to open, like the New York, London, or Asia session, and then track price for the first 30 minutes. After 30 minutes have passed, you'll mark out these two levels, the high and the low. This is called the opening range. Now, you wait patiently. If price breaks above the high, that suggests buyers are starting to take control. If price breaks below the low, that tells you sellers are in charge. But here's the catch, and this is where most traders get wrecked. Not every breakout is real. In fact, most of them aren't. Price breaks out, it looks strong, you get FOMO and jump in, and 2 minutes later, it's back inside the range, stopping you out. And that's why the real ORB strategy isn't about being early, it's about being right. So the question is, how do you know which breakouts are worth following? And that's where the ORB Algo indicator by Flux Charts comes in. Here's what it does. First, it defines the opening range. Usually, that's the first 30 minutes after the session starts, but you can adjust that in the settings. Once the range has formed, the indicator marks the high and the low. These are your breakout levels. Now, price starts to move. Let's say it pushes above the range high. Most traders would call it a breakout right there, but this indicator doesn't take the bait. Instead, it waits to see how the breakout behaves. There's two ways it can confirm the breakout, and the method you choose will completely change how this indicator behaves. The first is the close-based breakout. This one's simple. Price has to close above or below the opening range. Not just wick through it, not just touch it. The full candle body must close above the high or below the low. This method is great if you want quick, decisive entries, especially in trending markets. The second method is the EMA-based breakout. Instead of looking at price itself, the indicator looks at the exponential moving average. If the EMA line crosses the opening range high or low, that's when the breakout is confirmed. This adds a little delay, but it also filters out weak moves and fakeouts. So if you're trading during a volatile news session or an asset known for fakeouts, this method can keep you out of a lot of trouble. Now, once the breakout is confirmed, you might think the trade is good to go, but not yet. Every breakout needs confirmation. That's what the sensitivity setting is for. Let's say price breaks out and the confirmation method checks out, but then price comes back down and retests the same level it just broke. That retest is your make or break moment. If price holds that level and continues in the breakout direction, that's a retest. And depending on your sensitivity setting, the indicator might wait for 1, 2, or even 3 of those retests before it triggers a signal. Using a high sensitivity means no retests are required. The indicator will give a signal right after the breakout. Medium sensitivity waits for 1 retest, low waits for 2, and lowest waits for 3. If you're trading high volatility assets, you might want to use a lower sensitivity to avoid those fakeouts. But now comes the other half of the system, exits. Getting in the market is only half the challenge, but how you manage the trade once you're in is just as important. This indicator helps you with that. From setting your stop loss and take profit levels, and even moving your stop loss to break even automatically when necessary. There are 2 take profit methods to choose from. The first is dynamic. This one uses an EMA to follow the trade. As long as price stays on the right side of that line, the position stays open. But the moment price closes through it, that's your exit. This lets you catch strong trends, but it still reacts quickly when momentum dies. The second method is based on the average true range, or ATR. That means as soon as the entry signal is triggered, your take profit levels, TP1, 2, and 3 are predetermined. If you want a clear pre-planned target before you enter the trade, use the ATR method. If you want to ride trends and let the indicator adapt to price action, use the dynamic method. For the stop loss, the logic is just as flexible. If you choose the safer option, it will place the stop loss just outside of the opening range. If you choose balanced, it will place it right in the middle of the range. Or, if you choose the risky version, the stop loss will be placed closer to the range's low for a bullish entry and closer to the range's high for a bearish entry. And if you enable the adaptive stop loss, the moment your first take profit is hit, your stop loss will automatically move to break even. That means you've locked in a risk-free trade with 0 manual input. But even with all this logic, the real test is how it performs in live markets. So let's walk through 2 trades. Take a look at this chart. We're trading the 1-minute time frame. The opening range time frame is set to 30 minutes, and the sensitivity is set to medium. Price breaks below the range low. But notice, we don't get a sell signal right away. The indicator waits. Price then retests the low, and then we get a sell signal. Now, Look what happens. The indicator automatically shows where the stop loss and take profit levels are on the dashboard. Keep in mind that the take profit levels are only shown in advance when using the ATR take profit method. Shortly after, price hits TP1, 2, and then 3 before reversing. Now, let's look at another example, a bullish breakout. Price breaks above the range high, but this time we're using the EMA as the breakout condition. The candle closes above the range, but the EMA doesn't, so the indicator didn't give any signal. That fake breakout would have trapped most traders, but the indicator doesn't budge until the EMA confirms the move. A few bars later, the EMA confirms it. Fire your entry and wait for it to hit the take profit levels. That's the power of combining breakout logic with dynamic filters. But there's one more feature you need to see. The ORB Algo isn't just about helping with live trades. It lets you test your setup instantly with the backtesting dashboard. Here, you can find the past performance of the indicator with your exact settings. Things like win rate, average profit, and even the total profit percentage. This helps you fine-tune your indicator settings for your favorite assets without second-guessing or wasting time manually backtesting. You can even change how much of your position closes at each take profit level for the backtest results by adjusting the backtesting exit ratios setting. So if you trade the opening of your trading session and you're looking for a consistent, repeatable strategy, you've got to try this indicator. Grab it for completely free from the description, adjust your settings, backtest it, and put it in action. That's all for this video. If you enjoyed or learned something new, please leave a like, comment, and subscribe. Thanks for watching, and until next time.